Welcome to MogulCast, where we uncover the stories behind the world's greatest business empires. Let's get into today's story. $8 billion. That's how much Sam Bankman-Fried stole from FTX customers. Not lost in a market crash. Not misplaced in a hack. Stolen. While he posed as a selfless billionaire, he was secretly funneling customer funds to his hedge fund, Alameda Research, to cover bad bets, luxury real estate, and political donations. The lie lasted 3 years. The collapse took 10 days. Sam Bankman-Fried grew up on Stanford's campus, the son of 2 law professors. He was a math prodigy, a vegan, and a devotee of effective altruism, the idea that making money was a moral duty if you gave it away. After a brief stint at Jane Street Capital, he saw an opportunity in crypto, arbitrage between Asian and U.S. exchanges. In 2017, he launched Alameda Research with $175 million in seed money. Alameda's early success was built on a simple strategy: buy Bitcoin in the U.S., sell it in Japan or Korea for a 10 to 20% premium, and pocket the difference. At its peak, Alameda was moving $25 million a day. But Bankman-Fried had bigger ambitions. In 2019, he launched FTX, a crypto exchange designed to be faster, smarter, and more user-friendly than Coinbase or Binance. FTX's rise was meteoric. By 2021, it was the second-largest crypto exchange in the world, processing $15 billion in daily trades. Bankman-Fried's net worth hit $26 billion. He became a media darling, appearing on Forbes covers, donating $40 million to political campaigns, and even bailing out failing crypto firms like BlockFi and Voyager. The world thought he was a genius. The truth was far darker. FTX's competitive edge was its speed and innovation. It offered features no other exchange had: 24/7 trading, 100x leverage, and a token, FTT, that users could trade like stock. Bankman-Fried marketed FTX as the responsible exchange, even as he secretly used customer deposits to fund Alameda's risky bets. The line between the two companies was so blurred, even insiders didn't know where FTX ended and Alameda began. FTX's business model was simple: make money from trading fees. But Bankman-Fried's real strategy was growth at all costs. He spent $200 million on naming rights for the Miami Heat's arena, $135 million on a Super Bowl ad, and millions more on celebrity endorsements from Tom Brady, Larry David, and Steph Curry. The goal? To make FTX a household name, before anyone noticed the money was missing. The secret to FTX's growth was Alameda's balance sheet. Bankman-Fried used customer deposits as collateral for loans, then lent that money back to Alameda to make risky bets. When Alameda lost money, he covered the holes with more customer funds. It was a classic Ponzi scheme, but with a twist: no one knew it was happening. Not the customers. Not the regulators. Not even FTX's own employees. The first crack appeared in May 2022 when Terra's Luna token collapsed, wiping out $40 billion in value. Alameda had bet big on Luna, and the losses started piling up. Bankman-Fried scrambled to cover the holes, but the damage was done. By November, CoinDesk published a leaked Alameda balance sheet showing $5 billion in FTT tokens, FTX's own worthless currency, propping up the firm. The dominoes fell fast. Binance CEO Changpeng Zhao tweeted he was selling all of Binance FTT tokens, sparking a bank run. Customers tried to withdraw $6 billion in 72 hours. FTX didn't have the money. Bankman-Fried's empire collapsed in 10 days. On November 11, 2022, FTX filed for bankruptcy. The $32 billion company was worthless. The $8 billion was gone. Bankman-Fried's trial revealed the full extent of the fraud. Prosecutors called it one of the biggest financial frauds in American history. In March 2024, he was sentenced to 25 years in prison. FTX's new CEO, John Ray III, called it, "the worst corporate failure I've ever seen, worse than Enron." The $8 billion is still missing. 1 million creditors are still waiting. FTX's collapse changed crypto forever. Regulators cracked down. Exchanges now face stricter rules. But the damage is done. The $8 billion is gone. The trust is shattered. And Sam Bankman-Fried? He's just another cautionary tale, a billionaire who thought he was smarter than the system, until the system swallowed him whole. FTX's story is a reminder, empires built on lies always crumble. The question is, who's next? Subscribe to MogulCast for the untold stories behind the world's biggest business empires. Tomorrow, we're covering Theranos, how Elizabeth Holmes fooled Silicon Valley with a $9 billion lie. See you then. That's the story for today on MogulCast. If you found this valuable, subscribe and hit the bell. A new empire story drops every single weekday. See you tomorrow.